bring in our next guest. It's going to be Brendan Ahern. He's Chief Investment Officer at Crane Shares. Brendan, give me your take here on the Alibaba report, because it had already been on a good run, and this just kind of confirms the optimism, right?
Yeah, 100%, I think. And you correctly point out that a lot of investors need to realize that the company had sold off two of their legacy SunArt and In Time supermarket and department store chain. Revenues actually beat analyst expectations over 10% year over year when you exclude those. I think some concerns why we're seeing the stock rally, a lot of the concerns about this instant commerce, this fierce competition in China today. The company appears to be taking prudent steps. Obviously it weighed on net income, but the company is not destroying their balance sheet like we saw with JD.com and Meituan. And lastly, cloud outperformed. Cloud revenues increased 26% year over year, which I think there's a lot of emphasis, a lot of focus on how cloud, AI-driven cloud is going to propel the company going forward.
Yeah, and we've seen that with some of the domestic-based cloud providers, AWS, Azure, and also some of the others in that space, that the growth rates are still there. I think I just saw something, Wall Street Journal reported that Alibaba is developing more versatile chips amid the Nvidia ban. Does that come into play here, Brendan, moving forward? Because we've all heard the rhetoric over the last 6 months that, hey, there's more opportunities overseas, especially in China. Does that kind of weigh into your thesis here?
I mean, certainly if the U.S. government is going to restrict access to Nvidia's highest end chips, China and potentially other countries governments are going to force their underlying companies to come up with reliable solutions. And so certainly in China, you're seeing a number of companies. There's a semiconductor stock called Cambricon. It's up over 200% year to date. Huang, Sammy, there's a whole host of companies that will certainly fill any void if the U.S. government doesn't allow Nvidia to sell its highest end chips. And certainly Alibaba, I think in general, like a lot of tech companies, not just Alibaba, but if you think about Apple and others, they're so reliant on some of these semiconductor companies that they're just naturally going to see if they can develop on their own, keep that in-house, keep some of their costs down. So I think it's a added tailwind, but I think it's not the predominant growth driver for the company.
When you look at it, it's the second biggest component within KWEB, your ETF that's widely followed here. That's up about 28% so far this year. The impact here across the board, Brendan, as far as Chinese stocks, are we going to start seeing a continued optimistic view here? Or, historically we've seen this, pretty choppy over the last couple of years. Every time it seems like we get the hype built up, it pulls back a little bit. Do you see more opportunities for a lot of these companies like Alibaba, JD, Tencent, and others?
Yeah, I mean, we're definitely constructive on the space, but we are a long-only manager, so we're talking our book. But really, since January of 2024, if you look at the performance of KWEB on an absolute and relative basis, it's performed exceedingly well. So I think it feels like China takes 2 steps forward, 2 steps back. But the one person besides myself who's very bullish on China are technical analysts, because technical analysts, they don't think about geopolitics or whatever your concerns might be. They look at a chart at KWEB and they say from January of 2024, it's making higher highs and higher lows, and that's called an uptrend. So I think a little bit this rally is a bit of a stealth rally here in the U.S. It's just non-U.S. equities have underperformed the S&P 500 so significantly over the last 16 years. That's 64 quarters of, I open my Schwab account and I say, diversification doesn't work. But I think there's arguments that you're starting to see a re-rating of Chinese equities, and we certainly believe that the best companies in China are held in KWEB, and that's what's driving this performance, not just on a year-to-date basis, but over the last year and a half. And we're actually beating the S&P 500 and NASDAQ 100 pretty convincingly.
Yeah, it's followed that 50-day simple moving average to the upside. That's been a good base for KWEB moving forward. All right, great discussion, Brendan. Have a great weekend.
Yeah, and enjoy it. Take Monday off.
Yeah, thanks. Appreciate that. That's Brendan Ahern, Chief Investment Officer at Crane Shares with the KWEB ETF.